Good morning, everyone, and welcome to this series of webinar on EU Sustainable Finance Regulation. Our webinar series on EU Sustainable Finance Regulation intends to shed light on the fast-moving regulatory landscape of the EU in this area. And our first webinar back in June focused on MiFID II. As the directive started to get implemented in August. So if you've missed the first webinar of this series, you can consider rewatching it on our exclusive member areas on our website. And when it comes to the EU Sustainable Finance Regulation, the next looming deadline really pertains to the SFDR Level II, for which financial institutions and asset manager will need to report based on mandatory templates and the mandatory templates of the RTS, so the regulatory technical standards, and that will start very soon in January. And that's why today the focus of our webinar is really to deep dive into those regulatory technical standards, and including a deep dive also on PAI, so principal adverse impact. If you're joining us today, you should have already received the two fact sheets related to this topic, an updated version of the fact sheet on the PAI, as well as the new fact sheet on RTS. And the objective of today is really to deep dive on those two topics. And for this webinar, we have the great pleasure to partner with Ecofact, and we'll hear from Lana Ollier and Nuria Fernandez, Ecofact legal experts, who will provide a very detailed overview of the latest development in this area. The presentation will be followed by a Q&A, and it will also be the opportunity for members to exchange views on how an experience and how you are implementing or would implement those changes. And so without further ado, I want to thank and welcome Lana and Nuria for the presentation.
Thank you, Aurelia. Thank you for those nice words. Let me just quickly share my screen so we can dive right into the presentation. I hope you can all see now, or at least you should be. So a very warm welcome from my and Nuria's side as well. We are both from Ecofact, where essentially what we do is to monitor all those regulatory development pertaining to ESG and sustainability. And of course, the EU takes up a lot of our time here, not because we exclusively focus on the EU, but the EU, of course, being a leader here and also being very, very active in the regulation. And so this kept us very busy this year, in particular with regards to the SFDR, where, as Aurelia just mentioned, we are now all working towards this January 2023 deadline. And this is also what we'll get into today. Additionally, and this was a request essentially from our last webinar, we'll look at PAI's principal adverse impact indicators and statements. And this is, of course, one of the particularities of the EU, where we're really considering essentially this double materiality perspective. Again, we will do at the end of this presentation a slide or a poll asking you what we can look at in the next webinar, which will be in December. We will, of course, follow everything that comes from the EU side. Here is still a couple of things are outstanding. Another Q&A is still outstanding. So we'll keep an eye on this and make sure to, if new things arise from the EU, that we will also give you an overview over this. But for essentially the next webinar, the next deep dive, we would also be interested in your opinion, what you're working on, what we can help you with, what makes the most sense for you. So we'll do that at the end. The presentation will take around 50 minutes, and we are happy to receive your questions at the end. If you have questions during the presentation, maybe just include them in the chat, and then we can also take those up later. And with that, please just sit back and relax, and I'll hand over to Nuria to kick us off. What I'll do beforehand, though, is to have a quick look at the agenda with you. So we will first give a quick overview of where we're standing. We will then take a look at pre-contractual disclosure for Article 8 and 9 products. We will then take a look at website disclosure as well as periodic disclosures, and then do the deep dive into the PAI regime. And as I said earlier, Q&A at the end. And then finally with that, I hand over to Nuria to get us started. Thank you.
Thank you, Aurelia. Thank you, Lana. So yes, let's get started. So how did we get here? RTS, it's a buzzword that we all hear these days. And the RTS builds on the EU Commission Action Plan on Sustainable Finance, which was launched in March 2018. This plan contemplates a series of legislative measures that are designed to encourage private capital into the sustainable finance space. And the first major milestone of this action plan was the SFDR, which entered into force in March 2021, and that was quickly followed by the EU taxonomy. These two regulations, they require of regulatory technical standards, and this is what was published on the 25th of July of this year, so very recently, and they will enter into force the 1st of January 2023. These RTS, together with the SFDR and the taxonomy, they constitute this rule book for sustainability disclosure for financial products and institutions. And they set out the granular specifications for the content, methodology, the presentation of certain disclosures that are required by the SFDR and the taxonomy regulation. And yeah, they provide additional requirements which financial market participants, such as asset managers, must adhere to. The deliverables of the SFDR Level II or RTS can be broken down into 4 main areas, which are the ones that Lana mentioned in the agenda. So we have the mandatory pre-contractual disclosure templates for Article 8 and Article 9 products. We also have the website disclosures for Article 8 and Article 9 products. We have a mandatory template for the PAI or Principal Adverse Impact statement at the entity level. And we also have mandatory templates for periodic disclosures for Article 8 products and Article 9 products. Here in this slide, we have listed general tips to approach these RTS that enter into force on January 1st. So don't underestimate the time needed to prepare the RTS compliant disclosures. Pay attention to regulators' deadlines for having documentation approved before the RTS enter into force. Some regulators have committed to provide fast-track procedures ahead of the 1st of January to make sure that the documentation that is required for this deadline is approved. For example, that's the case for the CSSF in Luxembourg, which has a deadline at the end of October. So if you have your products domiciled there, check that out. Also, in Ireland, the central bank has issued a communication where they establish a deadline of the 1st of December to get all this documentation approved. So this would be for the pre-contractual disclosures. Then, of course, you would still have time to deal with the website disclosures, which would enter into force the 1st of January. Also, we still have a bit of time until the RTS enter into force, but concerned firms should collect data throughout 2022 to inform the first PAI report. The first data collection date was 31st of March of this year, which has already passed, and this will inform the PAI report that will need to be published next year on the 30th of June. So these are just general tips, and then we will deep dive into the specific templates in the next slide. Yes, thank you. So we will first start with the pre-contractual disclosure for Article 8 and Article 9 products, and that includes the taxonomy aligned disclosure for Article 8 and Article 9 products. So the RTS prescribes in detail the pre-contractual disclosure requirements that must be complied with for Article 8 and Article 9 products. And it's worth noting that the RTS do not provide or do not require additional pre-contractual disclosures for Article 6 products. When it comes to Article 8 products, concerned firms must disclose a prominent statement that the information on the environmental and social characteristics of a fund is available in the annex, and this annex is the Annex 2 of the RTS. And while using this mandatory template that the RTS prescribes in this Annex 2, they must disclose whether the fund intends to make any sustainable investments, whether the fund promotes environmental and social characteristics without having a sustainable investment objective, and for funds with environmental characteristics, to what minimum extent these sustainable investments with an environmental objective are aligned with the EU taxonomy. And we will come back later to the alignment with the EU taxonomy. Annex 2 of the pre-contractual template for Article 8 products also requires the disclosure of the environmental and social characteristics of the fund, the sustainability indicators used to measure the fund's success in achieving those characteristics, how any sustainable investment comply with the do no significant harm principle, whether the fund considers PAIs or not. We will also come back to this later. The investment strategy, the planned asset allocation. So there are a certain amount of questions that need to be answered, but the drafting notes in the annex were largely self-explanatory, and there are also margin notes on the left side of the templates that are to be retained in the client-facing template, and they also provide further information on how to approach the population of this template ahead of the deadline of the 1st of January. Then if we move on to the next slide, it's the pre-contractual disclosure for Article 9 products. So in the main body of the prospectus of an Article 9 product, financial market participants must include a prominent statement that the information about the sustainable investment is available in the annex, and then the annex is the mandatory template that we have here, so Annex 3 of the RTS. And here the funds should make a statement that the fund has a sustainable investment as its objective. And for funds with environmentally sustainable investments, the taxonomy alignment should also be disclosed. And again, we will come back to this later. Also in this Annex 3, the sustainability indicators used to measure the fund's success in achieving its objectives should be disclosed, how the sustainable investment comply with the do no significant harm, whether the fund considers PAIs, the investment strategy, the planned asset allocation, etc., etc. These two templates are quite similar. They differ mainly in the first part, where of course Article 8 are those funds that promote environmental and social characteristics, and Article 9 would be those funds that have a sustainable objective. If we move further, we have the taxonomy related disclosure for Article 8 and Article 9 products. So for funds which have an environmentally sustainable investment, financial market participants have to include a pie chart as the one here in the slide, representing the level of taxonomy aligned investments. Next to this pie chart, also another pie chart representing the taxonomy aligned investment, excluding the sovereign exposures. And then as these disclosures are quantitative with these pie charts, and then narrative. Also, financial market participants have to include whether this alignment is subject to an assurance provided by an auditor, and in case they are assured by an auditor, what is that auditor, whether the taxonomy alignment of investee companies is measured by turnover, CapEx or OpEx, and the reasons for that decision. Whether the taxonomy alignment is calculated using equivalent information obtained directly by the investee companies, by third data providers, or in the case that the data is not readily available from public disclosures, how this data was obtained or estimated. Also, when it comes to taxonomy related disclosure, a breakdown of taxonomy alignment between transitional and enabling economic activities should be included. Also, a clear explanation for any investments that are not taxonomy aligned should be included, and a narrative explanation of the proportion of investments in sovereign exposures which cannot be assessed for alignment with the EU taxonomy should be included. And then if we move forward to the next slides, we have listed here a few tips to approach the population of these pre-contractual disclosures for Article 8 and 9 and the taxonomy alignment. So first of all would be to sit down and review Annex 2 and Annex 3 of the RTS. As I said before, the templates are quite self-explanatory with the side notes and also explanatory notes throughout the template, but it might require some time to get the information to reach out to the appropriate teams. And that's when it comes to the second point. So familiarize yourself with the questions that must be answered and the data required. Third point would be to adopt processes and procedures for gathering this data that you need to answer the questions in Annex 2 and 3. Assemble the data and then engage with data providers to obtain the required data, the estimated data, etc., etc., etc. And then, of course, populate the template for the upcoming deadline of the 1st of January 2023, and include it in the product's pre-contractual documentation attached to the prospectus. Good, we can move now to the website disclosure for Article 8 and 9 products. This is also a point covered in the RTS. So the website disclosures are to be made in a separate section of the financial market participants website, which should be titled Sustainability Related Disclosures. And it's in the same part where the financial market participants list other information related to the fund, such as marketing communications. And this sustainability related information should be clearly linked to a specific fund, so an Article 8 fund or an Article 9 fund. The RTS provides mandatory headings for both Article 8 and Article 9, which are these 8 listed here. And then there are other specific headings that must also be included for Article 8 products, so specifically for this type of products, and some mandatory headings that must be included for Article 9 products, so specifically for these Article 9 products. I will just give a very brief word on these 8 mandatory headings that must be included for both products. So the summary is a 2-page summary that is required for the website disclosures, and it's a summary of the characteristics of the Article 8 or Article 9 product. And what's important here is that it needs to be translated, and the RTS clarifies that this translation requirement for the summary section is triggered where the product is made available, and that was not clear in the drafts from the RTS that we had before this final RTS from July. So the translation is triggered where the product is made available in a host member state and not just where it's marketed in a host member state. So we understand that this made available is a larger concept than being marketed. So be aware of the translation requirements, because they depend on whether a product is made available in a certain member state. The investment strategy. So financial market participants shall describe the investment strategy used to meet the environmental or social characteristics promoted by an Article 8 fund, or the sustainable investment objective by an Article 9 fund. And also the policy to assess good governance practices of the investee companies, including the respect to sound management, employee relations, remuneration, and tax compliance. When it comes to the proportion of investments, it's required to disclose the asset allocation, distinguishing between direct exposures in investee companies and other types of exposures to those entities. When it comes to methodologies for Article 8 products, financial market participants shall describe the methodologies to measure how the social and environmental characteristics promoted by the Article 8 fund are met. And for Article 9 products, financial market participants shall describe the methodologies used to measure the attainment of the sustainable investment objective, and how the sustainability indicators to measure this attainment are used. Regarding data sources and processing, Article 8 and 9 products shall describe the data sources used to attain the environmental or social characteristics or the sustainable investment objectives, the measures taken to ensure the quality of this data, how the data are processed, and the proportion of data that are estimated, because as we all know right now, there's not much available data in the market, so estimations are possible. This is linked to the next point, so limitations to methodologies and data. Yeah, so it needs to be clear where the data comes from, and where it's estimated, it should also be pointed out. When it comes to due diligence, financial market participants shall describe the due diligence carried out on the underlying assets of the Article 8 or Article 9 products. And then finally, engagement policies. Financial market participants shall describe the engagement policies implemented where engagement is part of the environmental or social investment strategy in the case of Article 8 products, or it's part of the sustainable investment objective in case of Article 9 products. Good. I think I'm speaking too fast, so I will try to slow down a little bit. If we can move forward to the next slide, this would be the headings for specific headings for Article 8 and Article 9 products. So they deal mainly with the no sustainable investment objective that should be explained for an Article 8 product, and same goes for Article 9 products. There are some specific headings that need to be complied, and the details of what's included in these headings, they are very well detailed in the RTS, and I think that we won't have time to go through them now. So let's move forward to the next slide, where we will, yes, give some tips on how to approach the website disclosure for Article 8 and Article 9 products. So review the mandatory headings for both Article 8 and Article 9 products, as well as the specific headings for Article 8 and Article 9 products. So the 8 mandatory, and then the 4 specific headings for each type of fund. Again, the RTS is very self-explanatory in this regard. But of course, if you have questions, we are more than happy to take them. As I mentioned already, be aware of the translation requirements, which are triggered when a product is made available in a host member state, and not only when it's marketed. So we understand it's made available as a larger spectrum of the translation requirement. And this is a change from the draft RTS that you maybe have been working on. So be aware of that. And then we will go later on to the PAI statement requirement, but this also needs to be published in the website. So it's important to maintain an up-to-date PAI statement in the website. If we move forward to the next slide, we have the periodic disclosure for Article 8 and Article 9 products. For these, we also have mandatory templates that are set out in the RTS. These can be found in our Annex 4 for Article 8 products and in Annex 5 for Article 9 products. These annexes, they must be included in the financial report. So in the main body of the financial report of the fund, there should be a prominent statement that the information about the environmental and social characteristics of the fund or the sustainable investment objective of the fund can be found in the annex to the financial report, and then the annex must be included following these templates, 4 and 5, depending on the type of fund. So the use of this mandatory template should contain, in the case of an Article 8 product, to what extent were the environmental and social characteristics promoted by the financial product met, and to what extent these environmental and social characteristics were met, and the performance of the relevant sustainability indicators, identify the environmental objectives under the EU taxonomy to which the sustainable investments of the fund, if any, contributed, were available. Also an historical comparison between the current period and the previous periods should be included up to a maximum of 5 previous periods. Also were applicable, an explanation on how the sustainable investment contributed to the sustainable investment objectives, and compiled with the principle of do no significant harm, including the PAI indicators, and also were taken into account whether the sustainable investments are aligned with the OECD guidelines for multinational enterprises and the UN guiding principles on business and human rights. Same goes for Annex 5. So in that case, it would not be dealing with the environmental and social characteristics, but with the sustainable investment objective of the fund. Both annexes also include a section on the top investments. So here a list where the top 5 investment of the fund should be included, and also how these funds contributed to the environmental and social characteristics of the fund and its development. And same goes for the sustainable investment objective of the Article 9 products. These should also be separated between sector and countries in which the investments were made. Also a section on the asset allocation, and then the economic sectors in which the investments were made, the proportion of sustainability related investments linked to the taxonomy. So it's very much ex ante and post of the pre-contractual disclosures that we already talked about before. So Article Annex 2 should be linked to the Annex 4, and they are all related to Article 8 products, and Annex 3 and Annex 5 should also be linked, and they are related to Article 9 products. Yes, if we move, we also included here key steps for implementing the periodic disclosures. So again, like in the pre-contractual disclosures, we recommend that you familiarize yourself with the information needed for the periodic disclosures, that you adopt the processes and procedures for gathering the data that you need to complete with these periodic disclosure templates, and that you gather and assemble the data. That you complete the templates for all periodic reports produced after the 1st of January 2023, and that's irrespective of the financial period that they are covering. So as of the 1st of January, all the periodic disclosures need to comply with these templates. And then very important, and this is also something that we have seen clarified by the Q&As of the Commission and the guidance from ESMA, that the periodic disclosures should be an ex ante and ex post of the same disclosures that we had in the pre-contractual template. So if we commit to do something, the periodic disclosure should give an explanation on how this was achieved, and this will be taken very seriously by the national competent authorities. And then we move to the PAI regime. So Chapter 2 of the RTS sets out in detail the content and methodologies and presentation that financial market participants should comply with under Article 4 of the SFDR, which is the PAI at the entity level. So financial market participants should determine whether they are obliged to publish a PAI statement at the entity level or not, or if they are choosing to do this voluntarily. After this, in respect of whether a financial market participant is able to opt out of the PAI at the entity level, but nevertheless wants to consider the PAI at the product level, so this would be linked to Article 7 of the RTS. The European Commission has confirmed that the PAI can be considered at the product level, even though it's not considered at the entity level. A financial market participant that considers the PAI of its investment decisions must disclose the appropriate information from the date it starts considering these impacts. The RTS for entity level PAI reporting provides a specification for the content, methodology, presentation, and it includes the mandatory template in Annex 1. So this is the one that we have here in the slide. The additional detail specified by the entity level PAI statement must be compiled with also from the 1st of January 2023, and the first information relating to the reference period of 2022. So from 1st January 2022 until the end of this year, 2022. Will need to be published by 30th June 2023. Also, it's important to know that the RTS do not set out any specific requirements with respect to the PAI considerations at the product level. However, we have this upcoming deadline of the 30th of December 2022, where for each financial product, the pre-contractual document shall contain the PAI disclosures at the product level, if any. And this must be done in a clear and reasonable way. So it should be stated whether the financial product considers PAI on sustainability factors, and a statement that the information on the PAI on sustainability factors will also be available in the annual reports in case that is taken into account. So for financial market participants that consider PAI, the deadline would be the 30th of June 2023, as I said, and they shall publish the PAI statement in the format of the template, also in their website. And for financial market participants that do not consider PAIs at the entity level, they should make a clear statement in the website titled "No consideration of adverse impacts of investment decisions on sustainability factors." And this statement should contain a prominent statement saying that the financial market participant does not consider any adverse impact of its investment decisions on sustainability factors, and the reason why they do not consider these impacts. Also, if at some point in the future they are considering to consider these PAIs, they should also include it in this statement in the website. And then if we move forward, we will go through the Annex 1 template. So first of all, we have a summary section where the concerned firms must include the name of the financial market participant, the fact that the PAIs are considered, the reference period. So for this first PAI that will need to follow this template, it will be 1st of January 2022 until end of the year 2022, so December 2022, and then a summary of the PAIs. This summary shall be provided in one of the official languages of the home member state, and also the translation requirements here apply. So the translation is triggered where the product is made available, which is a broader concept than where the product is being marketed. The summary section shall be of a maximum of 2 pages, A4 pages when printed out. If we move forward to the next slide, we have the PAI of investment decisions on sustainability factors. So the PAIs identified during the relevant reference period. These are should be included in this part of the PAI statement. For the moment, 18 mandatory PAIs are to be included, and at least 1 additional climate or other environmental related PAI indicator should be included. These additional indicators are in table 2 of the Annex 1. And also 1 additional social, employee, human rights, anti-corruption or anti-bribery PAI indicator, which is included in table 3 of this Annex 1, should also be included. And also financial market participants can include any other PAI indicators that they might deem necessary for the kind of product or services they are offering. Also, financial market participants shall describe the actions that they have taken during the reference period in the PAI statement, and the action and targets planned for the upcoming reference periods. And they also shall include a column impact in the section where they describe the principal adverse impacts, where they will add a figure on the impacts as the average impacts in every reference period. And if we move forward, we go to the section 3 of this PAI disclosure. So the policies to identify and prioritize PAI of investment decisions on sustainability factors. So financial market participants shall describe their policies to identify and prioritize PAI on sustainability factors, and how those policies are kept up to date and applied, including the date on which their governing body approved those policies, how the responsibility of the implementation of those policies within the organizational structure of the asset manager, for example, is allocated, the methodologies that they use to select the indicators and to identify and assess the PAIs. In particular, it's important to include an explanation on how those methodologies take into account the probability of occurrence and the importance of those PAIs, including if they are in some cases of irremediable character. Also, any associated margin of error within the methodologies that they have described in this section should also be disclosed here, and also the data sources used. So mainly what we see here is that transparency is very important. So everything that you do, all the methodologies, all the processes, they need to be well documented in this PAI statement. Then if we move forward, we have this section on engagement policies. This is very much linked to the shareholders' rights directive. So in this section of the PAI statement, financial market participants must provide, where applicable, brief summaries of shareholders' rights directives, engagement policies, and brief summaries of any other engagement policies to reduce PAI. These brief summaries must describe the indicators for adverse impacts considered in the engagement policies and how those engagement policies will be adapted where there is no reduction of the PAIs over more than one period reported on. So again, very important to be transparent on the processes and policies that you are using to assess these PAIs. And if we move forward, we have the last section of this PAI report, which is, well, there are two sections, but we put them together in this slide. So the references to international standards and the historical comparisons. In the section references to international standards, financial market participants shall describe whether and to what extent they adhere to responsible business conducts codes and internationally recognized standards for due diligence and reporting, and where relevant, their alignment with the Paris Agreement. This description that I just mentioned shall contain information about the indicators used to consider the PAI on sustainability factors that measure the adherence or alignment, and the methodology and data used to measure this adherence or alignment, including a description of the scope of coverage, again, data sources, and how the methodology used forecasts the PAI of investee companies. And then when it comes to historical comparisons, financial market participants that have described the adverse impacts on sustainability factors for a period preceding the period for which the information is to be disclosed, they shall provide a historical comparison of the period reported on with the previous reported periods, and they should do this subsequently in the upcoming reporting or reported periods. And this would be it. We have not included in the slides, a report on that was published by the ESAs at the end of July on the extent of voluntary disclosure on PAIs. This report is to be published by the ESAs every year. This is related to Article 18 of the SFDR. And so this is the first report that was issued in this regard, and it might help financial market participants that are struggling now with the population of these templates to see the approach that the national competent authorities will have or will potentially have. So what they found out in this report is that the level of compliance changes significantly across financial market participants. Larger groups comply better with this disclosure than smaller groups. Also, they have realized that financial market participants include unnecessary and potentially misleading information. So it's important to stick to the point and to the letter of the RTS. And they have also reported a low level of disclosure of the degree of alignment with the Paris Agreement. they have spotted these issues, but they have also included some best practices in this report. So the ESAs encourage financial market participants to give as many details as possible on the methodology used for the assessment of the PAIs, and to the extent applicable, the details on the reasons of alignment with the Paris Agreement. Also, financial market participants should not include ESG elements that are not relevant for the PAI statement, and that could be potentially misleading. And they should also include a clear explanation about why the financial market participant does not consider the PAI in case they don't, and the clear reasons why they don't do that. And if they don't do it because there's not enough available data, they should include the details on when or whether and when the financial market participant plans to consider the PAIs and the reference periods that they will use. Yes, it's also important to mention that the ESAs have been mandated to amendments to the PAI. So we are expecting those in April next year, so April 2023. So it might be that this template that we have now and the items that are covered will change slightly or will change completely. We don't know yet, so we will have to wait until the 28th of April of 2023. And as of now, what we can recommend is to familiarize yourself with the Annex 1 of the RTS, so the PAI statement template, to adopt the processes and procedures to gather the data that is needed, and to publish the PAI statement on your website always up to date. In the section Statement on Principal Adverse Impacts of Investment Decisions on Sustainability Factors. And so that would be it from my side.
Thank you. Then I would just quickly, with everyone going to the poll before we take the questions, so as to have an opportunity also to vote essentially while you're still thinking about your questions. And for that, I would ask you to either scan the QR code in the left corner here, left top corner that is, and vote, or to join us at slido.com using the link below. And the EU taxonomy, as of now, takes the lead. If you have completely other suggestions in terms of what to look at, please shoot us, meaning Aurelia, an email, and we're also happy to include this, okay? If something comes up in the next month or months thereafter, that is October or November, that you're struggling with, that you want us to look at, that will also be fine, okay? We are really, in order to make this webinar the most useful to you, we sort of rely a little bit on your feedback here in terms of seeing what keeps you busy, what are you thinking about, how we can best help you with this webinar, okay? So please reach out and let us know, and if those topics are of interest here, then please vote. So at the moment we here have the SFDR clarification and RTS amendments. That is, of course, something in particular with the clarification that we do not always can pinpoint to, because the EU often has quite a delay in this. There are some expected for October. Let's see if they actually come in October, and then we are, of course, happy to provide an overview over those, as well as the RTS amendments, which will now in particular pertain to nuclear and gas activities, of course. And as Nuria mentioned, we are also expecting those that are mandated for April, but of course that we cannot speak on in December already. And this will be regarding the PAI regime, potentially adding additional mandatory PAIs. The EU taxonomy, of course, is also something that will increasingly become relevant also to financial market participants, where we're moving into the disclosure in 2024. Of course, corporates are already reporting on this. At least eligibility in the next year alignment. So this will be interesting. to look at. Sorry, where can I vote? The vote would be if you scan the QR code on the left, or you join the website that is slido.com and use the number code, then you can, okay. And then we also already have a question. And Nuria, I would just read this to you, okay? And that is, which disclosures are subject to external audit requirement? Is there a difference between EU countries?
Yeah, so from the EU regulation, there are some disclosures that can be audited, and if you audit them, then you have to provide the name of the auditor, but it's not mandatory to audit them. As of now, the main or the regulator that is concerned will be doing the monitoring of those disclosures. But when it comes to the EU, there are no mandatory audit requirements as of now. Are there differences between the EU? Well, that also depends of the different regulators implementing all the EU sustainable finance regulations. So, for example, it might be that in France, they are a bit more strict than they would be in Ireland or in Luxembourg. So this is to be monitored, of course. But when it comes to the EU, there are no requirements, or no audit requirements. That was the question.
Maybe, Nuria, there is another one. At product level, we are being told that if we consider PAIs, we can choose to report only a selection of the PAIs from the table. Is that correct?
Well, there is no guidance or very little guidance when it comes to the product level PAI reporting or disclosure. So as this is something that it's not mandatory, we would assume that you can report on those PAIs that you feel more comfortable with, or that you can find more data as of now, because data is quite a challenge at the moment. And since there is no template to be complied with, we understand that yes, you can choose the PAIs that you feel more comfortable with. We will have to see if there is more guidance on this, and there are also a set of questions that were sent to the Commission that deal with this. So we will see if they reply anytime soon to those. But as there is no template, this would be our assumption too. Are there any more questions?
Maybe we just give people another minute to think about if they have additional questions. Just maybe
I would have one, if that's okay. Alfie Lacroix from Symbiotics. Actually, my question is on sovereign exposures. The RTS mentioned that there's two methodologies to calculate the extent to which those contribute to sustainable investments, but they specifically refer to environmentally sustainable activities. So should we consider that these two methodologies can be applied to social sustainable investments and environmental sustainable investments, or is it limited to environmental?
Well, as of now, for social investments, or the social taxonomy is a bit not there yet, and maybe won't be anytime soon. So for the moment, we would just apply them to the environmental objectives.
Okay, but so does that mean that we should consider all the RTS provisions to be only binding on environmental investments? Because if you have a fund that's mostly social, then how do you account for sovereign exposures? Do you leave them out of the calculation of the portion of sustainable investments, or should you
Well,
include
as
them?
of now, all the calculations and all the taxonomy aligned calculations, they deal with environmental objectives, because those are the ones that that we have. Of course, we need something to report, right? And if we don't have any information from the regulators as of now, we could of course use and estimate those alignments using the environmental objectives, but all the calculations that are provided as of now, they always make reference to environmental objectives related to the EU taxonomy.
Okay, because it would make quite a difference depending on the funds whether you include them or you exclude sovereigns. So we wanted to seek confirmation that we are basically free to, as long as we explain the rationale for excluding or including sovereigns, that it's a choice. If we have the choice for environmental sustainable investments, we have the same option for social.
As of now, as there is not guidance on that, and as long as you explain, and this is what they have, the ESAs have been very clear on in this report that they issued in July, and all the Q&As and clarifications, is that as long as you explain and you're clear on what you are doing, transparency won't be punished.
Okay.
And then if at
Good.
some point we have something written, then you have to comply with what's written, of course.
Yes. Okay. Thanks a lot.
We still have a couple of questions in the chat. Let's see how many we can still go through. And the first one being, if decided to go for an Article 8, but not to allocate a percentage on sustainable, and then I allocate it, should I need to comply with PAI and taxonomy? I'm not really sure with this question, to be honest. I don't fully understand it. So if the person could maybe ask this question once more orally, I think that would help. Or do you understand it fully, Nuria? Because I don't.
Well, so let's say an Article 9 does not allocate a percentage on sustainable investment. Then the taxonomy alignment is of course difficult to calculate, because that is very much linked to having a sustainable investment. And I don't know if that answers the question or not, because it's also not very clear to me.
Okay, if the person could ask this question, this is Frederica, again, orally, maybe that would help. And I would then move to the second question. And also, Frederica, otherwise, you could just send us an email, and then we're also happy to provide this answer to you in written form, okay? And then we have a question from Thomas, which is SFDR Article 7.2 says that should an FMP opt out for considering PAIs on entity level as per Article 4.1b, it may do so at the product level as well, as long as explanation is provided, comply or explain principle. Therefore, I wonder where the obligation to comply with considering PAIs at the product level in any case comes from.
Well, it's complying with the PAI at product level is not mandatory as of now. So
yes,
you might consider PAIs at the product level if you deem that you have, for example, enough data as of now, but it's not mandatory to consider them. But then it's true, for example, that with MiFID II that enter into force now in August, you might offer, or one of the questions that you might ask your clients is whether they want products that consider PAIs. And so if those products, they don't consider PAIs, that cannot be included in the basket of products that you would offer to a client that has a sustainability preference. So then you're also excluding some products that could be offered to clients if you don't consider those PAIs. So it's not mandatory, but if you link this to other regulations, you might want to consider those PAIs at the product level so that you can offer them when, for example, doing the suitability assessment under MiFID, and a client expresses his or her preference to have a product that considers PAIs. And for that, you need to consider PAIs at the product level. So no obligation, but potentially interesting.
Okay, I think this answered Thomas' question. And then we, if we have one additional minute, could just quickly go into Georgina's question, which is, I've seen interpretation that an Article 9 fund should have a minimum 75% in sustainable investments, while others say it should be 100. Which is your view?
So an Article 9 fund should be as sustainable as possible, right? So it should include as much sustainable investments as possible within the meaning of the SFDR. As of now, we don't have a percentage, right? And this is one of the questions that were asked to the Commission in the Q&A that was sent to them last week. I think, I don't remember the day exactly. So the clarification of what is a sustainable investment. What we see, for example, is that society and also regulators are quite strict on that. So also national regulators have a say on this. And some of the market participants, some asset managers, they are reclassifying their funds from Article 9 to Article 8. So I would not say a percentage of 75 should be enough, or 100% is what should be. It's more how you feel your fund or where you want to set your risk level as an asset manager, and say, okay, 75 for us, it's good, 100% is good. It depends on whether you want to assume that risk, or where is your risk appetite there. There is no definition from the regulators and from the EU.
Thank you, Nuria. Since we're already over, I've copied the last question from Federica, and we will just provide this to you via email, okay? And we'll just send the answer to Aurelia, and she can then distribute that, if that's okay.
That's fine. We can also take 2 minutes if you have time.
Okay. I'm just want to make sure that everyone can off it whenever they want. Okay. Yeah. I can read the question, and worst case, we can provide also written answer, and then for those that need to log off, we can still distribute this. But the question would be, if in the pre-contractual I said I don't allocate a percentage on sustainable instruments, I opt out for PAI and taxonomy. But let's suppose that during the year, I decide to allocate a portion on the portfolio to sustainable instruments, then in the periodic statement. Should I mention it? And in this case, should it trigger to comply to PAI and taxonomy?
Okay, so you should disclose or report on your consideration of PAIs as of the moment where you start considering them. If you don't consider them, you don't have to report on them. And when you start considering PAIs, then it's when you have to report on them and to include them in your disclosures. And then the second question is, well, as of when you start considering PAIs, then you should comply with what's required when you consider PAIs. If that answers the second question, which I'm not sure, but that would be it. You need to start reporting when you start considering them. If you don't consider them, you need to make a statement on why you have decided not to consider them. And I hope that answers the question, but it's very long and I think I got lost in the middle of it. So
Great. Yeah.
We hope it does, and otherwise, Frederica, please feel free to reach out again, and then we can maybe provide you clarification in a written form again.
Yeah, no, thank you so much, everyone, for the question. And as Lana mentioned, if there are more, also please feel free, and we'll make sure they get answered, and you get the requested reply. So thank you again, thanks again, of course, to Nuria and to Lana for their great expertise and all this knowledge shared in the context of so many changes at the EU level. That is always not easy to navigate, and we can see that in the questions as well. So thank you very much. You will all receive the presentation right after this webinar, and we look forward to receive your feedback on other topics if you feel that it should be another topic. Otherwise, we'll just go by what the poll has told us, and we look forward to see you in December 14 for the next webinar of this EU Sustainable Finance Regulation series. So thanks again to our speakers, to EcoFact, and thank you all for attending. Have a good day.
Thank you, Aurelia.
thank you.
Bye.
Bye.